Hi, Patrick. So today we're just going to be talking to you about your participation at Enlit Africa 2026, particularly to the investor platform, which we're calling it the project and investment on the program for Enlit this year. So my first question to you is, looking across the continent, what are the most significant developments you are currently seeing in Africa's energy and infrastructure landscape, particularly from an investor point of view?
So from an investor perspective, looking at the energy and infrastructure landscape on the continent, I think the most important development is probably the shift that we're seeing from a focus on building generation to one of building systems that can absorb, the generation that is being built by developers. The traditional IPP model with a single, usually state-owned off-taker has shown its limits over the past 10 years, mainly because of various issues such as the time to market, the payment issues experienced in many countries, and then the difficulty in executing on securities when problems arise. The second, I think, thing that we're seeing is that transmission constraints, distribution losses, utility revenue collection levels all have become gating factors. So capital is increasingly interested in ensuring that the overall system around power generation, not only the power plant itself, so that overall system actually works. In parallel to that, what we're seeing is that C&I is becoming a major growth engine in some parts of the continent. Commercial and industrial customers are increasingly willing to sign long-term contracts for reliable supply, even through wheeling or embedded generation, where regulation allows and makes sense for it. So I think fourthly, one other notable trend is the convergence that we're seeing now over the past few years between energy and digital infrastructure, as data centers, fiber networks, cloud growth are forcing a step change in reliability expectations of energy users and are creating really long-term duration demand for power that is being added to existing demand. And I think lastly, what we are really seeing is investors are also watching the acceleration of storage and hybrid solutions, because these turn intermittent generation into dispatchable supply, which improves bankability overall and system value. So across all of this, the direction of travel is pretty clear. Projects that improve reliability, reduce system bottlenecks, and can scale repeatably are the ones that are attracting the deepest pool of long-term capital.
No, brilliant. Thank you, Patrick. I also want to move on to another perspective that is very prevalent in your career, where you have led origination and execution of infrastructure investments across Francophone Africa. What are the key factors that determine whether energy projects in these markets are bankable and investment ready? How does your perspective around bankability differ from others operating in the same space?
Well, I think really the key factors that determine whether energy projects are bankable and investment ready in Francophone Africa are the same as elsewhere. The fundamentals remain the same, maybe with a stronger reliance on public sector offtake, because if you look at Francophone West and Central Africa, that's what I'm focusing on. Probably over 80 to 90% of generation is still procured by state utilities, and the IPP model is very much still central. So because private sector participation is more limited than in Southern Africa, where wheeling and trading now account for hundreds of megawatts annually, investors scrutinize the full sector more intensely, especially the financial robustness of the utility off-taker, and placing less reliance on the security package. So for IPPs to be bankable, just to remind everyone, the essentials include, transparent procurement, predictable tariff structures that are aligned with cost recovery, credible payment mechanisms, and if there's going to be government support, it needs to be easily enforceable and not require multi-year negotiations.
Then this takes me to my next question on how our investment strategy is evolving in response to energy security concerns, fuel transition pressures, and the need for scalable generation capacity.
Energy security is the daily reality that households, industry, and governments feel most directly, right? Strategies are evolving, I think, towards resilience first investing, which means that investors are prioritizing assets that deliver dependable supply and system stability, including flexible generation, storage, and grid services that improve reliability across the whole value chain. So at the same time, the transition pressure is pushing capital like private equity towards solutions that reduce costs and emissions without creating fragility, which is why hybrid structures are becoming more common, such as renewables paired with storage, and then selective use of gas where it enables reliability and supports integration of more renewables over time. Another major evolution that we're seeing is the move from one-off projects to platform strategies, where an investor builds repeatable capability, standardizes contracting, and develops multiple assets under a single operating model. That's, for example, what we're doing in our investee company, NOAA in South Africa. So this approach improves scalability, it shortens development cycles, it supports capital recycling once assets are operational and cash flow stabilize. And I think basically investment is becoming more of a system-led, more execution-focused, more deliberate about building capacity that can be delivered at scale.
My other question to you is, what would you say is the role, or what role do long-term institutional investors play in crowding in capital and accelerating project execution across African energy markets?
Well, long-term institutional investors, the role they play is a catalytic one, because they can provide patient equity with the holding periods of 10 years or more. They can help to enforce governance discipline and really stay invested through cycles, which is essential when you talk about infrastructure where value is created often over decades rather than quarters. In many African markets, the presence of credible, long-duration equity really reduces perceived risk for lenders. We see that every day. And that helps crowd in larger pools of debt and improves the overall cost of capital. Institutional investors can also accelerate execution by raising standards on project preparation and contracting. And this reduces the risk of failure and makes refinancing and expansion more feasible once these projects are operating. So for us at AIIM, the goal is really not to fund an asset on an asset-by-asset basis. It's to build an investable pathway where projects become repeatable, where projects are scaled and financed more efficiently over time. The practical outcome for us is faster closings, better execution, and a pipeline that grows from isolated transactions like we used to do before to a functioning market and platforms operating within it.
From your perspective, why is a platform like Enlit Africa particularly important at this stage of Africa's energy transition?
So a platform like Enlit Africa is especially valuable right now because Africa's energy transition is no longer really constrained by ideas or targets. It is constrained now by coordination and implementation. The continent is showing real momentum. Renewables already account for roughly 60 to 70% of new generation capacity under development. Several countries are advancing gas to power where it makes sense. And you see utilities pushing grid modernization to accommodate increased renewable generation. But projects still stall when policy intent, utility procurement, grid readiness, and overall bankability requirements don't line up. So that's why this kind of platform provides a forum for industry players and utilities to progress alignment on the practical questions that decide whether projects reach financial close and then come to fruition. And it's questions like what risks should sit with the off-taker versus the state, where investment in the grid access is the most critical, or what kind of wheeling rules should apply, and what standard security packages the market can accept without adding months or even years sometimes of renegotiation. So a platform like Enlit Africa also helps move the conversation from isolated deals to investable pipelines. And that is what long-term investors such as ourselves are looking for. Visibility and alignment speed up deployment, which is exactly what the transition needs at this stage.